The Bollinger Bands. The development in trading bands came about in the mid to late 1960s and earliest published in 1970 by J. M. Hurst. Known as trading envelopes, these were shown as shifted moving averages above and below the price by either a certain number of points or a fixed percentage. Envelopes around price gained popularity and are still used today. Later, in the 1970s and early 1980s, John Bollinger determined that allowing the market to dictate the bandwidth would always be more useful than a fixed ratio. Shown as two bands, it is created by a 20-period moving average, as standard, and a 20-period standard deviation of the price enveloping the moving average. The indicator itself can be interpreted in several ways. Tightening bands is known as contraction. This is where the market consolidates in a tight price range. Then ideally, expansion with a breakout observed in the price. Bullish expansion and bearish expansion. Both bands expand on the move, indicating a strong move over a short period. Price will frequently walk the band, which is an indication of increased volatility relative to the time frame. There are also moves without band expansion. Bullish move up, where the bands don't expand as much and stay together. This indicates that the move won't be as strong. While still a bullish move, this indicates that the price is simply consolidating at a higher level. And a bearish move down, which is the inverse, likely to consolidate at a nearby support level. Another method of interpreting Bollinger Bands is to note when the price moved above or below the upper or lower bands in the short term. These prices are known to be overbought or oversold. Like the MACD, a number of child indicators have surfaced, notably the percentage B and Bollinger Band width, both introduced in 2010 by John Bollinger. The band width, subtracting the lower band from the upper to find absolute difference, then normalizing by the middle band. This can be used to find the relative narrowness of an instrument, and identifying the typical squeeze before expansion is usually observed. The percentage B. This oscillator shows how the price moves relative to the envelope of the Bollinger Bands. Movements close to 0 or 1 indicate movement strength, but outside of the bands, with results over 1 being temporarily overbought and below 0 being temporarily oversold. This can be used with other oscillators such as the RSI and MSI for determining entry points. Hidden divergences can also be observed using indicators such as the percentage B. When observing the price making new highs and lower strength moves in the percentage B is an indication of trend weakness. These methods are the most popular ways of interpreting the bands, but this list is not exclusive. There are many ways to use them alone and with support of other indicators. The Bollinger Bands. Thank you very much for watching, and cheers. Please like and subscribe if you'd like to see more content like this. Next video is OBV, or On Balance Volume.